Someone asks, what does the panel think of the metaverse? And I mean, it's interesting. Tim mentioned Facebook. That's a company that's made a major shift and a big bet on that particular theme. But equally, I've spoken to fund managers who still see it for the time being as kind of a frothy, hyped up kind of area. But what do you guys think?
I think really with the metaverse, a lot of people use the analogy of it's a little bit like the dot-com era. There'll be one or two things which actually really were a good idea and will go on to be very successful. But with the metaverse, we're dealing with a lot more complexity of that. So, for example, shopping malls and buying space in shopping malls as online retail space. But obviously, the fundamental problem with this is that anyone can create an online retail space. It's not the same as having Oxford Street or New York Square. It's just not quite the same thing. So I think, and then you can't almost say the word metaverse without automatically being connected to cryptocurrency and anything else that we've had. So if you look at NFTs as well, I think trading volume's down 98% compared to its peak earlier in the year. So again, it just goes to show that at one point, you couldn't move online for NFTs. Anybody who wasn't purchasing NFTs was obviously some sort of moron because obviously there was so much growth to be had. But now we look at it and you can barely sell them for anything compared to what they bought before. So I think metaverse is something which for most retail investors, it's not always particularly easy to get exposure to things like metaverse, and you're going on to other types of platforms and exchanges to access that market. And then obviously in terms of price manipulation, I think it's going to be very apparent in 5 or 10 years' time just how much price manipulation there is in some of these markets compared to, say, the S&P 500 or the FTSE 100. So I think metaverse is definitely an area, but probably one which people should be using the money which they can afford to gamble is perhaps the wrong word, because it's still an investment, but money they can afford to potentially lose or have a significant part of it lose overnight. And obviously the long-term return could be good, but yeah, it needs to be very careful, I would say.
I mean, just to add on to Dominic's comments, I would, if you think about it, and I always go back to the gold mine analogy, I'd rather own picks and shovels than have to prospect and figure out what the right claim is, unless you told me there's definitely gold there, because lots of people went up to the California hills and came back, penniless. So, I mean, I think on the metaverse, as I think about it, it's something we've done over my tenure at the fund. We've often owned the enablers, right? So I want to be agnostic to if I'll use, the comment about the mall, I want to be agnostic to the mall, but I'd happily look at the companies that provide the technology that help build the mall. And I think that, I think his comment is spot on just the liquidity aspect of some of these markets. And I think it's something everybody on the call understands, which is, markets are efficient when you have, good supply and demand on both sides, right? And you take a look at something like an NFT, and the demand dries up and the spread between what I want to sell it for and what, Victoria is willing to pay me can be massive. So I just think investors have to be cautious. And, I always go back to this kind of notion that if it sounds too good to be true, it is. And I pretty much tell my kids that, a lot. But it really, I just think people get caught up, and the people that, the people that usually do the best are the people that were there early and, whatever, were part of the initial hatching of the, I don't want to say scheme, but let's just say the idea. I think investors are just best served on really thinking about, think about products and services you use. I often remind people, when I'm talking to friends and stuff, what are products you love? What are companies that you say, gosh, you know what? The best people I know work at that company. Those are that kind of bottoms up, really grassroots oriented. I think for the retail investor, it really makes a lot of sense.
Can I just add on quickly, Dave? Sorry, just to jump in just right at the end of that. So you mentioned the retail clients there, Mike, and I think that's the other sort of challenge out there as well, is the whole regulation piece. Because I think, a lot of times there's a bit of a lag in the industry, isn't there, between what's acceptable and what's really deliverable at sort of discretionary investment management firms or stockbroking firms, etc., whether clients can actually realistically access cryptos and derivatives and all the things that they might be. There's a whole sort of appropriateness sort of situation going on with the FCA, and I think that's something that's probably under more spotlight now. And you mentioned NFTs, that's another one that's going on at the moment. All sorts of consultations. So that's often a bit of a challenge for private clients, and whilst it's extremely interesting, growing area, often it's that sort of challenge about exposure to it, and more potentially a job for sort of fund management side, and you can gain exposure indirectly that way.
Sorry, go on. No, I think there's a big investor confidence piece as well around it, because I think what the NFT and the crypto space has taught retail investors who are sat at home having a go and then getting excited and finding themselves sucked in more and more. I think what everyone's learned is just how much hype there is. Not to say that the metaverse or cryptocurrency or NFTs in themselves, that there isn't value there, but just how bad individuals are at finding that value amongst so much hype and noise. And so I definitely think investor confidence has diminished when it comes to these sort of things that are so kind of far away from the world we live in day to day at the moment.
I think another thing which can be mentioned about the cryptocurrency space is that some of the firms have done other firms to shame. Like, if anyone's ever been on a Binance application before, it is absolutely remarkable. It is the way that they trade everything is just unbelievable. It's better than any platform you would get from any of the main high street banks that have been doing it for 100 years. And that is part of their strategy. The way that they allow you to trade, the X, the leverage, the this, the that. It's basically like being inside a casino, inside the application. You feel like this awesome day trader and all this type of stuff. And that's probably, they've got a lot of deep pockets to build that software. And the whole industry is underlyingly is involved by people who are into coding and into that type of stuff. So they've got people working for them for coins and stuff like that. So they've actually attracted in that the software and the technology in the sector is remarkable. I can give them that much. For people like Binance, they've really pulled the stops out in terms of giving retail clients the ability to do stuff that they could never do inside a general platform account in the UK or the US.
It does make me nervous though when I hear, and I haven't never been on it, but I've heard good things when I hear things about leverage and derivatives. I think that, to Victoria's comments, everything sounds great until you realize, like, oh no, it's gone.
Well, I've had some friends say to me, "Oh, I can't believe this crypto I had. It's done. I put $100 in and I have $500 something." And I'm like, "That's physically impossible. Let me check this out." And they go on the thing and I'm like, "Yeah, because you had 20 times leverage on." They're like, "What's that?" And I'm like, "Oh, it's the default setting inside the application." Obviously, a lot of the firms have stopped doing that now. I won't mention their names, but some of them got into a little bit of hot water. And there was even some bad instances of some very young individuals losing a huge amount of money and having very big mental health issues because they suddenly realized I've gambled a huge amount of money.
My son is 17 years old, and I remember last year and the year before he was asking. Some of his mates were, they were buying crypto, and I just came home and I said to them, this doesn't end well. It doesn't. It doesn't end well for if there are a bunch of young people that are, to your point, like, everything in finance, to get return requires accepting some risk, and understanding and quantifying those risks is really important things for every investor across all asset classes, no matter whether you have $100 to invest or $1 billion to invest. Understanding the inherent risk associated with your investment really matters.